Hi everyone, welcome back to the channel. Today we've got some major updates from the worlds of finance, tech, and trade. Let's dive right in. First up, big news in crypto. The US Treasury Department and IRS have officially repealed a controversial crypto broker rule. This rule, introduced in 2021, aimed to force decentralized crypto platforms, like DeFi protocols, to report user transaction data. But now it's gone. This means non-custodial services won't have to collect custom information anymore, easing the regulatory pressure on DeFi. Next, President Trump is escalating trade tensions. He announced tariffs of 25% to 40% on imports from 14 countries, including Japan and South Korea, starting August 1st. He also threatened an extra 10% levy on BRICS nations that align with anti-American policies. This move aims for reciprocal trade, but has already caused US imports from China to drop 28% in June and rattled global markets. China warns against these tariffs, while the EU is racing to finalize a trade deal to avoid new duties. Interestingly, global banks are set to benefit, with some expecting a 10% boost in revenue from increased market volatility. On to tech. Artificial intelligence is reshaping the industry. Nvidia just hit a historic milestone, becoming the first publicly traded company to reach a $4 trillion market cap. Thanks to its leading AI chips and software, Nvidia has even surpassed Microsoft and Apple. Meanwhile, TSMC, Nvidia's key chip supplier, reported a huge $31.9 billion in Q2 revenue, up 39% year-over-year. Goldman Sachs raised their year-end target for the S&P 500 to 6,600, citing reduced policy uncertainty, strong earnings, and potential Fed rate cuts. This is their second upward revision in 2 months, signaling a 6% upside from current levels. With tariffs easing and earnings holding strong, the market looks set for continued growth. And finally, in the food sector, Ferrero Rocher has acquired WK Kellogg for about $3.1 billion. This caused Kellogg's stock to jump over 30%. The deal consolidates brands like Nutella, Kinder, Frosted Flakes, and Special K. It's part of a bigger trend of food companies merging amid changing consumer preferences and muted sales. Let's take a look at the economic indicators for this week. Starting with consumer credit for May, borrowing slowed to $5.1 billion, well below $10.4 billion forecast, and down sharply from $16.87 billion last month. This could signal a pullback in consumer spending, possibly due to cautious sentiment or tighter lending standards. Meanwhile, a surprise in the energy sector. Crude oil inventories rose by 7.07 million barrels, despite expectations of a 1.7 million barrel drawdown. This unexpected build-up may suggest weaker demand or increased supply, both of which could pressure oil prices and reflect either seasonal factors or economic cooling. In the bond markets, we saw slight upticks in yields. The 10-year note auction yield rose from 4.362% to 4.421%, and the 30-year bond auction ticked up from 4.844% to 4.889%. These changes suggest a modest softening in demand for long-term government debt, possibly due to inflation concerns or anticipated rate hikes. Turning to the jobs data, positive signs continue. Initial jobless claims came in at 227,000, lower than the 236,000 forecast, and continuing claims dropped slightly to 1.965 million. This points to ongoing labor market resilience, with fewer layoffs and solid re-employment trends. On the monetary front, the Fed's balance sheet declined modestly from $6,660 billion to $6,662 billion, reflecting continued quantitative tightening. This reduction may gradually tighten financial conditions and impact liquidity in the broader economy. Finally, the CFTC S&P 500 net speculative positions dropped deeper into negative territory, from negative 86.8k to negative 140k. This indicates rising bearishness among speculators, likely driven by macroeconomic uncertainty or geopolitical risks. Next week, market attention will be focused on key economic indicators and earnings reports, including month-over-month core CPI, month-over-month retail sales, initial jobless claims, month-over-month PPI, and crude oil inventories. Meanwhile, several major corporations are set to release their earnings reports, including Morgan Stanley, Fed, the Goldman Sachs Group, Equity Bancshares, JP Morgan Chase & Company, Wells Fargo & Company, BlackRock, Citigroup, Bank of America Corporation, and ASML ADR. So what's the big picture? A cooling in consumer credit, cautious sentiment in markets, and a strong job market all paint a complex economic story. Make sure to stay tuned for next week's data as we track inflation, earnings, and more. That's it for today's roundup. Did you like this breakdown? If so, hit that like button, subscribe, and ring that bell for your weekly macro updates. Thanks for watching, and we'll see you in the next video.